Everyone, welcome back to my YouTube channel Manu Isu ACCA classes. So in this video, I will be discussing further more question from the Kaplan Kit of F3, so called Financial Accounting, and this question is from the General Ledger and Accounts and the Journals. So in my previous video, I have been discussed question number till 101. So in case of any viewers who have been missed out my previous video, you can still access those video from the playlist available on my YouTube channel, right? So in case of any new viewers who are watching my video for the first time, do not forget to subscribe my channel and share it among your friends so that they could also have the benefit. Okay, so let's start the today question. That's question number 102. So what the question says, state whether each of the following statement is true or false. Okay, so we have to just tick which one is true and which one is false. The first statement states that the general ledger of computerized accounting system will permit an unequal value of debit and credit to be posted for an individual transaction. So basically, the general ledger does not allow unequal debit and credit in the single transaction. Okay, so the accounting system requires balance of both debit and credit in double entry bookkeeping system. So that's why this statement is false. Okay, moving ahead, the next statement is the journal is an integral part of general ledger. So the journal is a separate book of prime entry used for recording transaction before they are posted to the general ledger. Right, so it is not a part of the general ledger itself. That's why this option is also false. Okay, moving ahead, the payable ledger of an individual credit supplier is not the part of the general ledger. So the payables ledger is separate from the general ledger because it contains detailed information about individual suppliers. Okay, so while general ledger only holds summary of those balance. Suppose we have a 10 supplier, and for each of the supplier we are having a separate ledger. So general ledger will have a summary of all those ledger, right? So this is true. Statement 4. The payable general ledger account will include accounting entries for irrecoverable debt written off. Okay, so irrecoverable debt relate to the receivable, right, not to the payable ledger. Okay, so and basically these are written off from the books of account and written off from the receivable ledger. Okay, not from the payable ledger. So that's why this is incorrect. Okay, so moving ahead to the next question number. The question says the petty cash balance at 30 November 20x9 was 25 and following transaction occurred during the November 20x9. So what is the petty cash balance float at 1st November 20x9? We have a 4 option. So as I mentioned in my previous video as well, in this kind of question you can solve very quickly over calculator as well. And for the beginner who don't know about in which side to be like plus minus, or they might feel challenged initially while doing this kind of question, so for them I would suggest to do this kind of question by making a laser, and I will show you how. Okay, so I hope my screen is visible to everyone. So here we are having leisure of petty cash balance, and we know that, let me merge these two. Okay, so this one is petty cash leisure, right? Okay, so this one is debit side and this one is credit side, right? So the balance they have been provided is of the credit side, that it means the carry forward balance, and which is 90, right? Sorry, 25. So they have provided 25. And the question asks the balance as on 1st November 20x9. That means they are asking the brought forward balance. So that will be, suppose, x. Okay. Okay. So the next refreshment will purchase at a cost of 7.25. So if we are purchasing something, it will reduce our balance, right? So refreshment, I will write in the shortcut for your understanding. So it will be 7.25. The next we have a travel expense of 12.75 were reimbursed to an employee. So again this is the expenditure and it will reduce our cash. So travel by reimbursed to employees 12.75. And the next, the cleaner was paid 15. Cleaner was paid 15. So what is the total balance on the credit side? Total will be, let's add all those amount. We have 7.25 and we have 12.75, then 15, then again 25. So it will give 60. So as I said, in double entry system both sides should be balanced. That means the total here should be 60 and on the debit side it should be 60. So here that means the value of x is 60, right? Okay. The next question is, which of the following explain the impress system of operating petty cash? The first one is saying weekly expenditure cannot exceed a set amount. So in case of petty cash, I will explain through an example. In my previous office, there was a certain amount that has been kept as a petty cash, and from those amount, we used to have a small amount of expenditure. Like if someone comes up to have snacks and all, we used to use those amount. If any employee is having birthday, we used to use those petty cash for those bringing a cake and sweets and all. So in this kind of expenditure being incurred through the petty cash, so there is no limit. We cannot say it should not be exceed from the amount which we have been fixed. It can be exceed depending on the expenditure. So this is not how the impress system operates. Okay, the system does not limit expenditure by the time. It simply require uh, what we can say reimbursement to maintain the fixed float. Right. So suppose we have been fixed 10,000 as a petty cash on the monthly basis. So it does not means we cannot. There is no any limit for the weekly expenditure, that in a weekly wise we have to spend this amount. Right. It can be expend more. There is no limit. Okay. So that's why it does not explain the impress system of operating petty cash. B1 is the exact amount of expenditure it is reimbursed at the interval to maintain the fixed float. Yes, obviously this is what the this is how the impress system of operating petty cash works. Okay, so that's why B is somehow correct. As I said, if someone is having the petty cash balance of 10,000 per month, so if after the end of the month they need to top up this balance by 10,000. Okay, so see, All expenditure out of petty cash must be properly authorized. Basically, these are the rules to verify the balance. Okay, so it is important from the point of control so that the cash is not misused by any of the employee working in the organization. Okay, but it does not define the, explain the impress system of operating petty cash. Okay, so this one is also incorrect. Basically, A and C is incorrect, B1 is correct. Let's look for the D. The regular amount of cash are transferred into petty cash at interval. So, in the Impress system, it's based on the actual expenditure, not the regular or equal amount. Okay, that's why it's incorrect. Moving to the question number 105, it seems to be quite easy as I did for the petty cash one. Let's do this one as well. So in here we will keep the receivable ledger. Okay, because the question has been said that you are given following figure for the receivable and sales and receivables, and for 2 years they the figure they have given. So basically for the 2006 it will be the opening balance, brought forward balance, or you can say like that, and receivable year in balance of 20x7 will be the closing one, so we will keep it here 7474963. Okay, and sales, obviously if we are selling here they don't mention whether it's a credit or cash sale, so let's assume it's for now it's a credit sale. Okay, so if we are selling the goods on the credit, so it will increase our receivable balance, right? So here we will put this figure, and the amount is what? 6697104, right? And the next is total cash received from customer. If we are receiving the cash from the customer, it will reduce our receivable balance, and the cash amount is 66912. Next, we have a specific allowance for the receivable. For the specific allowance, I need to discuss few things. So specific allowance will not have impact on the ledger. However, while showing the receivable balance on the balance sheet, we need to deduct this, but in the ledger it won't be deducted, right? So that's why we will not consider this specific allowance for the receivables. And regarding the irrecoverable debt, again this amount is not receivable, so that's why it will reduce our receivable balance. So what is the amount? It's 1697. So adding up all this give our total. Let's see how much it is. 1686,912. 169774963. It give this much, and on the debit side we are only having 697,104. So which one is greater? Okay, so on the credit side we are having the more balance, isn't it? I did a mistake, I think. Let me check it out. Okay, I forgot to add the brought forward balance. So it's 69472. So okay, so now debit side is greater than credit one. And what's the difference? Let's calculate like this, and difference will be our sales return. So it's a 3004. Alright. So this is for the question number 105. So I hope this video is useful for you guys as well as interactive. So in next video we will be moving for the rest of the question, and till date please stay tuned with my channel, subscribe it, share it among your friends who are appearing for the financial accounting paper. So let's help them, and thank you so much guys. Have a good day.